a lot of the big tech stocks have suffered, certainly over the last quarter, as the market has. How is it impacting the pace of investment in the Valley, your outlook for 2019? Is this something that companies are largely shrugging off as a Wall Street thing, or is it hitting home there in Silicon Valley as well?
Well, I think you can break that question in a couple pieces, John, and it's the right question to ask. First is, I think that many of us, myself included, view the Fed missed an opportunity the other day to basically raise interest rates, but then to say, I'm going to pause and watch how quickly the market is changing. When you have the stock market almost in bear territory on the NASDAQ, and it might have just crossed into bear territory from its August high, down 20%, that's an indication. When you have CFOs around the world thinking that we may be going into recession, like 75, 80% of them, then all of a sudden you can have a self-fulfilling prophecy. And the Fed can't do the same things they've done before in terms of the amount of time, in terms of guidance. So I would like to have seen them stabilize it. In terms of venture capital startups, it's been huge investments in the Valley and across the U.S. I was just in France. We saw many VCs leaning in on high tech. So in terms of investing, thinking 2-5 years out, the VC community and private equity is pretty bullish.
We've been hearing anecdotes of boards bringing down their internal growth forecast, but did you just say 80-90% see recession coming?
Yeah, I think it was 70 to 80%. I think it was the CBS survey of chief financial officers, and it was done in terms of outlooks for late 2019 and 2020. Again, I saw the slowdown in 2000 the hard way. Our business was up 70% at Cisco, and then within 45 days, it was in free fall. We saw it in 2007, where we just saw a slight hiccup in the financial markets, but we said something's wrong in the middle of 2007, and it turned out it slowed later. That goes back to why I think the Fed missed the opportunity. I think it could have stabilized these markets and just sent a more cautious tone in terms of saying that we'll be there quickly if we need to.
But it sounds like, you know, people who try to draw analogs between this slowdown, if that's what we have, and prior slowdowns like 01 or 08, you think those comparisons are not entirely meaningless?
No, I think the stock market signaled them ahead of time, and it was usually a segment of the economy that said it first. And so I think the odds are that we will personally, my own view, not go into recession, because the majority is usually wrong on this. But I think we've got to realize there's much more negative pressure on the market than positive, and I think it is an appropriate time to be cautious.
John, how big a role is China and our trade war with China playing in your calculus around this? I mean, IP issues in China, no stranger. You're no stranger to that, having dealt with so much of it at Cisco. How much of this is something that the U.S. needs to prosecute right now in order to have the kind of growth needed in the future? And how much of it is really causing the kind of near-term pressures that are leading CFOs to have those kind of projections you were just talking about?
Well, when you have the two largest economies in the world in a major trade dispute, and it's clearly slowing down the economies of both sides in terms of that dispute, it's clearly a factor. You combine that with Europe being soft, and you suddenly see U.S., China, and Europe in a period of softness. It is absolutely a factor. I've been in China for 40 years. I was with Wang Laboratories. The Chinese are great business partners historically. They've always been tough negotiators, but a win-win environment. The last 10 years, it's been more of a win-lose type mentality. And unfortunately, I think we have to get back on a level playing field. American companies have to do business in China the same way Chinese companies want to do business in America. It can't be two sets of rules. There's got to be intellectual property protection. And while I wish we'd found a more gentle way to have this trade dispute, it's an issue. You can't have a $370 or $400 billion deficit between the two trade balances and not treat both countries with a win-win attitude. So it's absolutely a factor. You saw it in China's numbers softening, and often the numbers on the state side may be even softer than the public ones they see as well.
John, I still miss the color that you brought to earnings calls, commentary on the quarter and so forth. I wonder what you made of FedEx's commentary this past print, where they said that a large part of the global slowdown that we're seeing, and that includes Asia and Europe, is the result of political mistakes. Is that something you would have echoed?
Well, FedEx and their leadership has always been very candid. I don't think we're executing with the effectiveness we need in terms of our politics, both in Europe, in the U.S. and in Asia. And I don't think it's one party or the other. I think we've got to get back on track of making the right decisions for the country for the long run. And I think we've got to do this together, not with a minority group influence on it. So I think I don't know if it was their chairman said that or their CEO, but I think they are fair in their comments. Yes.